Sachin, good afternoon. Thank you so much for giving your time to ET Now. It's a pleasure talking to you this afternoon.
Hi, thank you for having me on the show. Always a pleasure. Thanks a lot.
Yeah. Start with and talking about the texture of the market, it is absolutely seen that the markets have made peace with the fact that there will be uncertainties and a lot of contingent scenarios from the global front. But the rational approach would be to behave maturely. Now, if we see, there are a lot of positives and India's strong macroeconomic foundation. If we talk about the GDP numbers, the inflation scenarios, all positives there, but at the same time, for a shorter period, if we see there's a lot of volatility also which the market has to digest. What, according to you, are the macro tailwinds which will give positivity and a boost to the domestic markets?
Sure. Thank you. As we all know, one of the best things is that market always climbs the wall of the worries. And that's, I think, we have clearly witnessed in the last 3 months because the month of May, we had this India-Pakistan tensions. The month of June, we had Iran-Israel, US tensions. And in spite of all of this, if you see the quarter, I think at the indices level itself, Indian equity markets have delivered almost 10 to 12% gains, just April, May, and June. And I'm sure company-specific small cap indices have actually done even better. So I think if I have to take if I have to really think about what has actually played out, so I think two or three very important things. I think one of the most important things, as you rightly said, in terms of our the confidence from the regulators for our inflation, for our GDP growth, and the kind of the support that they're giving. I think the RBI policy, also support from the government side. And I think another very important factor, which has always been a challenge for the Indian economy, has been oil prices. So I think in spite of all these Middle East tensions, oil continues to remain significantly below $80, which is typically our tolerance level at an India GDP or an absorption capacity. So I think it is a good 15-20% below that level. So I think these two factors, where RBI support on the liquidity side, interest rate scenario, and the oil prices remaining very subdued, and on top of it, of course, the monsoon outlook. So I think all of this seems to be playing out quite well. So whatever challenges that we've seen in the last, I would say, 2 or 3 quarters, as far as some slowdown in the consumption, some slowdown in the GDP growth, hopefully that all will be taken care of and we will see a decent amount of revival with all the factors that are playing out right now in the next 2 to 3 quarters. So I think the outlook being a much more optimistic is what is giving the buoyancy in the markets.
Sure. Sachin, hi, afternoon. Kavita this side. And definitely, when we began this year, it was chaotic and then we got a bit of clarity in between. And now as the world order, India is definitely standing out. And as per your commentary also, we can expect a lot of optimism. Having said that, since we are focusing on your specific sectors now with this particular question, and the second half of this month is very important, you mentioned coming 2 to 3 quarters would be very defining for India also if everything goes well, especially on the macro level and globally. So what's your take on sectors? How are you looking at? Where are you undervalued or where have you gone aggressive in terms of your positioning?
So there are two parts again to your question. One is in terms of where the sectors are kind of relatively undervalued, and also I would say maybe not very undervalued, but the growth outlook seems to be very, very secular, much more stronger as we move ahead over the next at least couple of years. So from a valuation perspective, I think clearly what we like at this point in time is the private sector banking. We believe that some of the leaders over there are very reasonably priced and they will be able to manage this, the pressure on the NIMs after this 1 or 2 quarters, and they will again bounce back very strongly as far as the profitability is concerned and the growth, bottom line growth is concerned. So I don't think there is any challenge anyway as far as their deposit growth or credit growth is concerned. That will continue to do well, but maybe a couple of quarters here and there in terms of the profitability, but that should also be taken care of because the kind of the strong franchisee that they have and the valuations are very reasonable over there. So that's definitely one of our top betting sectors at this point in time. I think even within the auto space, Although currently, again, the numbers are not monthly numbers are very, I would say, somewhere between subdued to kind of not so great. But again, there, as I said, thanks to the RBI policies and thanks to the liquidity coming back in the markets, we do expect that sometime in the around the festival season, the demand should come back very strongly. But over there, I think the more important thing is to play the premiumization story. It's not just a pure volume game. So you will have to look at the value growth rather than just the volume growth there. And not only value growth at the top line, but value growth at the profitability, because typically the premiumization story gives you better profitability. So EBITDA growth will be far better in some of these businesses out there. So I think auto is another sector where we believe that your risk reward is favorable, although there may be a near term, a subdued kind of volume numbers. I think other than that, if you think about it from a little law, take next 2 years, 3 years, kind of a secular story, and the themes that we've been actually liking for the last 3, 4 years, and we believe it has still strong and long legs. One is, of course, the contract research and manufacturing, the CDMO space, particularly in the pharma side. So the CRAMS and the CDMO space, the custom synthesis, I think some of the companies over there have tremendous amount of tailwind, whether it's China plus one, whether it's Europe plus one. All of that seems to be now culminating into really, really strong order books and order inflows. And execution will continue to happen over the next 6, 8, 12 quarters. So and you can clearly see that with the kind of the capex that's happening at the ground level from some of these companies' side. So I think that's one very big secular thing that should continue for at least next 2, 3, 5 years. And I think the other one is also in terms of the manufacturing sector,
Right.
companies which are focused on both the domestic and the export side. So I think these are some of the themes that we are quite positive about.
That's right, Sachin. While you talk about manufacturing sector, we have seen that the markets have truly recognized the theme of manufacturing ever since the government did begin talking about the Atmanirbhar Bharat. But taking it from there and talking about global front, if at all you have a view, Trump is turning up the heat on the trade talks, saying he has no plans to extend the July 9 deadline, but he adds that there is going to be a great deal with India. All positive news flows at present, on the face of it at least, if you at all have a take on it.
Yeah, sure. See, I think the way to look at it is that, this tariffs is a very relative game, right? Because tariffs is not only for India, it's going to be for multiple countries. And at least in the first round of tariffs that we saw, at least the first announcements of tariffs that we saw, clearly India was much better positioned. Of course, after that, a lot of negotiations continue to happen, and I'm sure the things will get better only. But I think the more important thing to really focus is what is the value proposition that our companies offer to the customers, particularly in the US markets or the European markets. And if we are really giving them great value proposition, so for example, whether it is textiles, whether it is electronics manufacturing, whether it is engineering and within engineering, hardcore engineering, or some of the power equipments, and of course, then the auto and auto ancillaries and contract research and manufacturing and specialty chemicals. I think all of this, at least the 6 or 7 industries, Indian corporates have demonstrated that they have the domain expertise, they can deliver the scale to meet the global demand, and they respect the intellectual property rights. So I think we have earned the right to win over there, and clearly, over there, the value proposition that our companies have. So I think tariff, if at all, will be a pass through to the customers over there, because not that these businesses are making some crazy kind of ROCs or ROIs where they can actually absorb this. So I think it's going to be a mutual understanding between the end customer and the Indian manufacturer how to manage this. But because we have a strong value proposition relative to any other competitive countries, I think our at least the 6, 7 industries have a very, very strong outlook for the next 3 to 5 years.
Right, lots of optimism in your talks. Thank you so much on that note, Sachin, for all the time that you gave us and helped our viewers formalizing their portfolio today.